Hi, folks, and welcome to another episode of Money and Politics Now. And as promised, we are going to do interviews sometimes with new investors. And joining us is a relatively new investor, David. And David and I spoke through a mutual friend we were brought together. And David was interested in learning something about the market. As a reminder, ladies and gentlemen, I'm not a registered financial broker. I am just a fellow who has been investing for about the last 40 years, and I really think everyone ought to be investing and everyone ought to be more financially educated. And that's what this channel is about. It's really about financial education and wanting to bring you information. And so David and I spoke, we think about 7 months ago. It's not like we wrote it down in our diaries, dear diary. Uh, but I wanted to follow up because so many times I think we use jargon and you turn on the financial cable channels, and a lot of times they're not really talking to people who are new to the finance game. So David is, and a lot of times I learn from kind of following back up and say, hey, when you asked me questions and I shared with you some of the information, did it do any good? So that's really what the nature of this interview is. And David, thanks for joining us.
Yeah.
And tell us, what was your experience before you and I spoke and you were asking me questions about how to get started? What was your perception previous to that conversation about investing? And then why don't you just kind of update us since you've been investing, how has that gone for you?
Well, first of all, I want to thank you for having me on this because I think it's very important for people my age. I'm 26 years old to start learning about this at a younger age. My experience was very little. Never talked to my father about any of the stock market deals and stuff like that. But I always was very intrigued with it, but never kind of went out and did it myself. So, the person that connected us together, he started getting into it, and he was telling me, was kind of making like a little bit of money doing it, and he reached out to me and got me connected with you, and we ended up talking for about, Terry, it was probably about 2.5
Yeah.
hours that we ended up talking. Took a lot of notes, ton of notes.
So
But
was it something when before you had invested, before we spoke, which I think we're guessing was maybe back around June of 2020
mhm,
or so. Right at that time, just to remind people, of course, the pandemic hit late January to February. The low in the market was right around St. Patrick's Day of 2020. And at that time, around June, we in the United States kind of thought, hey, we're coming out of this, and the market started to go up. And then, well, there's a new strain and different things. And anyway, so the rest is history, as they say. But that was the context of when we were talking.
yeah.
Were you, and I don't even know, are you still a 20 something? Are you 30 yet? Or
No, 20, actually turned to 27
oh,
Monday.
happy
So,
birthday.
yeah, thank you. Appreciate that.
And so I think that's February 1st, isn't it?
Yep.
I have my middle son is February 10. So another February boy. But the thing is, what were you wanting to get involved in the market? Had you thought about it? And if so, why didn't you do it prior to us talking?
Uh, you know, Actually, I did get a little after seeing what the market was doing. Like, obviously, everyone was like very like nervous and stuff. Stock market crashed a lot. Um, but I was talking to a friend of mine about the situation that we were having with people not being able to go out to eat or go to the bar, anything like that. We didn't have that. So oddly enough, I thought to myself, I was like, Grubhub might be like a good time to get into. Like, how else are people going to get their food? Restaurants are closing, can't have anyone in there, and it's going to be a great opportunity for Grubhub to help those companies reach their customers. So, I opened up a Robinhood account. I think it's a very, very good um, application for young investors to get into. It's pretty easy. They make it very easy for you. So I bought a couple shares of Grubhub, and after about 3 months, I mean, that stock started skyrocketing. I was I was ahead of the curve because I kind of thought to myself, this is what's going on, and kind of just thinking to yourself, what's going to happen. People are going to start using that app more, and I thought that would turn into some profits, which it did.
And then you and I spoke, and I told you about some things. How useful, if it wasn't, you don't have to pat me on the back here. I'm just sincere. When I talk to you, because the things I shared with you is the kind of things I'm going to be sharing on the channel just to a broader audience. But we spoke about a number of different things. I may not even remember all of it because you say we spoke
Mm.
for probably about 2.5 hours on the telephone. In fact, this is the first time you and I have even seen each other, so that we.
Yeah.
How much did you learn, and to what extent were you able to use the information that I shared with you?
Oh gosh, I I don't even know where to start. Like, I learned a lot. I mean, it's just basic things. Learning about, like, what is the S&P 500, what is the Nasdaq. I did, before talking to you, I didn't know the S&P 500 was 500 companies. I had no idea. So I think you kind of jump started my interest of, like, learning. And so I picked up a couple of the books that you had recommended to me. I did my own research of, like, learning about candlesticks and stuff like that. But you really opened up my eyes to, it's not a scary thing, and you can put yourself into the market in a way to where you're going to be a little bit more secure. It's not that scary. You diversify your accounts to where you don't have everything in one category, that it actually, if one stock goes down, you're not going to go broke or anything like that. You start out small, like I did. I started out with, maybe $200.
I'm
So
glad
I
you
diverse.
said that, because people think, well, I can't get started. I only have a couple $100s. And I'm like, folks, with something like Schwab, or you can use Robinhood. I prefer things like
Mhm,
Schwab or E-Trade or Ameritrade myself.
mhm.
But especially now without the commissions, they used to have $10 per trade commission. Well, without that, you can buy one share, two shares, and I would argue, and you can tell me your own experience, that if I'm just talking to you about something, you can learn some things from that, but you really learn by doing, right? I mean, even
Yeah.
if you're buying two or three shares, I would say don't let that stop you, because that's how you learn, by being
Mhm.
involved in it and feeling the excitement of the stock going up, or the fear of it going down, whatever. That's all part of the learning to master your emotions. I would say is one of the big things that people need to do. It's almost more or equal as much emotions, I should say, or at least 50% of the game. It's not
Yeah.
just learning all these fancy things. In fact, I would say this is so simple. It really isn't that complicated to become an investor. And if you just keep it simple, to make some money, you may not become the richest guy on the block, but you're going to be better off than you were beforehand.
Mhm.
What were some of the, let's say, maybe you didn't make any big mistakes. Hopefully, I helped you avoid some. But what were your gains, and what were if you had any mistakes, what were those? And just why don't you add what were some of the lessons that you think you've learned along the way then, from now having done it? Because aside from that one call, I want to make clear to people, it's not like I'm calling you up and telling you what to buy and sell. We
No.
had one conversation that lasted, as we said, about 2 hours. That was about 7 months ago. And since then, this is about the first time we talked, except for me talking to you just earlier today so that we could do this interview.
Yeah. I think that first stock that I ended up buying, that Grubhub, was like, oh my God, like I did it. Like, I actually made money in the stock market and stuff like that. And it kind of, like one of the things that you told me, I believe it was you that told me this. It was like, you wanted. I'm a fan of Apple products and stuff. Sony. I looked into those stocks. It's something that I use on a day-to-day basis. I like their products, so I bought a couple of the shares. I believe in the companies. I believe in the technology, so I bought a couple of them. Sony, not that quick of a stock growth. It's kind of more so of a developed company. And I believe you were the one that told me about, was it velocity?
The velocity of money.
Velocity of money. It just wasn't there. I dabbled in that a little bit, but the biggest thing I think that you taught me, and I haven't made any crucial mistakes, was by having my anchor stocks, my stocks that kind of had a steady incline to it. I know that they weren't going to drop too much, and then I started buying a couple shares of different markets, healthcare, technology, e-commerce type deals and stuff like that. And it's been pretty good. And I use like a lot of the tools that you've told me about. Yahoo Finance is great. I think that's probably like my tool that I would suggest to like everyone is, you're buying a stock, throw it up on your watch list, and you get notifications, you get stories and editorials and stuff about those stocks that are relative to the stock, so like kind of what's the plan for the company. Yeah, I haven't made too many mistakes so far, thank God. But
On a percentage basis, do you know how much you're up from what you initially started with?
From what I initially started with, I mean, I started with $200, and then every paycheck that I got, I threw a couple more dollars in there and stuff. And while I'm doing that, I'm still diversifying my stocks to where I have that 40% base, and then 30% in just different style stocks.
So did you buy the S&P 500 or some of the other indexes we talked about?
The indexes that you told me about, I ended up purchasing the UDOW, which was the
UDOW, UDOW, which
UDOW,
is a leverage for the viewers. That's a leveraged index on the Dow 30.
And I also got the leveraged NASDAQ. So
TQQQ, three Qs.
Yep.
And and I would think in this last year that you probably came out all right on those. Huh?
Yeah, I would say my overall portfolio across the board is up anywhere between 55 and 60%.
That's pretty good. The S&P 500 by itself was up 17% last year. In fact, let me bring up for the viewers, this is Yahoo Finance, as you can see up there, and this is a chart of the S&P 500. And the S&P 500, if you look in the upper left corner, it says S&P 500 ETF. An ETF is kind of like a mutual fund, but better. I'll do a video on that at another time. Right below that, in the upper left corner, you can see $370, and that's what the current price is for the S&P 500 per share. So if you put $370 in and buy one share, that one share is tied to the value of 500 different companies on a weighted scale. And one of the cool things, and if you can see up here in the upper left, we hit comparison. And this is a one-year chart, by the way. If you look over here that says one-year chart, if we want to look at a 5-year chart, let me do, there you go. You can see this dip right here. That's where the pandemic hit. But you can see previous folks, and you know, say, oh my God, I bought up here and now it went down. Well, don't worry about it. It goes back up. And you know, when bad news comes out and stuff happens, what I tell people is over time, you're going to make money. And if you look, we're back up much higher than where we were when the pandemic broke out just a year ago, and we see how it fell. This is what's called a V-shaped recovery because it went down and came back up. Now, one of the things, let's go up here and we can compare that I told David to buy. I didn't tell him to buy. I said it's one of the things I said are available. I just said these things are out there, and let's compare what he bought to the S&P 500, which is kind of the market basket. And let's go to a yearly chart. That's kind of interesting. I'm surprised the UDOW didn't come out higher. But that's the Dow Jones, okay, the UDOW. If we look at a 2-year chart, what you see is you get more volatility in the UDOW here. It went down, it came back up, and then we get a 5-year chart. And look, over time, you can see that the UDOW is much higher. And because we're looking at that on a small screen, it's hard for me to see what is that percentage of growth, but I think it's about 280% over a 5-year period, where the overall market is up 91%, the S&P 500. So that's where these leveraged investments, they're going to be thrills and chills. It's kind of like a roller coaster, as you can see, but over some period of time, you're going to be better off. And as David was doing, adding more money to his portfolio from the savings, that's really a good thing to do. When you buy, as we have down here, and that's where the pandemic hit, I mean, look how your money is going to keep growing. And if someone says buy, X, Y, or Z stock, you can go in here and take a look. Let's throw in the other thing we mentioned, the TQQ. This is one of my favorites, but folks, you got to be careful with this because the professionals will often say you shouldn't buy these things. I say the record shows you should, but when the market's at an all-time high, that might be something where you either don't use this. The TQQ is 3 times the NASDAQ stock market. So when the market is at an all-time high, either just buy the TQQ lightly or just wait to do it. Maybe if the market comes down, I don't like light blue, but let's do a golden color, something we can see. Boom, and you can see this is, again, a 1-year chart you see at the top. So while the overall market, the S&P 500, as you can see there, the blue line, up 16% last year. The UDOW was up, looks like 19%. It's hard to read again on here, but the TQQ was up 85%. And if we go to 2 years, we see how these change. Over 2 years, the TQQ up 315%, and over 5 years, 1,000, almost 1,200% for the TQQ. The other thing, and we'll come back to David here, but that blue line, folks, that blue line, 91% for the S&P 500 over 5 years, 90%, if you're in mutual funds, 90% of mutual funds underperform that blue line and charge you a higher fee than what you're getting in the return from the UDOW or the TQQ. And another one, in fact, the U Pro, which is, let's add that in here real quick for people. U is in Union, PRO, and you can see that's the ultra shares of the S&P 500. So this is 3 times the blue line. This is 3 times leveraged on the S&P 500. So let's pick that. And again, I'm going to do maybe something green so we can see it. And boom, you can see with the U Pro, you're getting 3 times the S&P. So where the S&P over 5 years went up 91%, the U Pro was up 320%. So it's not an exact science that it's 3 for 1, but more or less. And David, that's something that you used, and have you been? I would say you've been. I'm going to guess. I don't want to put words in your mouth. I would guess that you're satisfied with your investment record in your first year of investing. Not even a year so far. If you're up 60%, that's pretty doggone good.
It's it's been pretty exciting, and it kind of makes me think like, man, I wish I got into this like a little bit earlier. But because of my success in it, though, I've been able to tell like a lot of my friends about opening up a Schwab account and just putting $25 or something in there, just so you can get started, get that feel of making money or losing money. But I always tell them, look up the companies, see what they're about. Yahoo Finance gives you like all of the information you need to basically, know where a company's going in the next couple of years. And, they're publicly traded companies. So, you get shareholder meetings and stuff. I know that you had just released like a video on, TSNP, which they opened up a shareholder meeting. Watch the videos. A lot of people can gain like a lot of information on the videos and know, if it's a safe investment and stuff. I always tell people to be careful. Start a little slow, learn. You'll learn by failing, learn by winning.
Did
Yeah.
I was going to say, did you have any? Did you have any money go down or anything after you bought? Did it go down? And if so, to what extent? How did you handle that emotionally?
Um, you know, I handle everything in my life. My dad taught me at a young age, cool heads always prevail. I had a couple of stocks that dropped, upwards to like 20%. And what I did with those was I still believed in the stock going back up. So as it went down, I just bought more stocks. So like I ended up, my average of a stock might have been $25 and it dropped to $20. Well, I bought more shares at $20. Now my average is, $22.50, somewhere around there. But I'm not selling because my position on that stock, I'm telling myself, is that I have a year plan for it. I'm anticipating this going up this percentage, and I'm not going to touch this until a year, 2 years, 3 years, something like that. And I get updates and stuff. Maybe if I saw it drop like a significant amount to where I was losing, I don't have that much money in it right now. The only money that I have in the stock market right now is money that I'm willing to lose.
Well, and I would say money, an important point is that money that you don't need to get your hands on. I mean, you don't want to
Yeah,
invest money on February 1st that's going to pay your rent on March the 1st. You need to
right.
be able to keep your money in the market because otherwise you're going to be taking it out, and the market might be down then. Imagine if you had something that where you had to pull the money out last St. Patrick's Day when it was at the bottom of the pit where the stock market had just fallen through about the end of January, almost 1 year ago. And it just fell all the way through February, and we got to St. Patrick's Day right around March 17th was the low. And then it kind of like panic. We got used to it as a world. Okay, we're not all going to die. We're kind of treading water, and then things started to come back.
Yeah.
And again, we can maybe see that just as a reminder. Let me go to that 1 year chart, and again, you go up here. This is Yahoo Finance, so you can see that. Actually, it's back here in the beginning of the chart on right around St. Patrick's Day, and that was the low point. And then you can see the different things came back up. One of the things that you and I have discussed is when you're investing, and you tell me, I'm kind of looking to see what your experience or if you think this is true. When I'm investing, and I like it not only to make money, but I learn so much, and I continue to learn. And again, I think I bought my first stock back around 1978, April or so of 78. That's like your first date, you remember who you went on a date with. I bought Polaroid at 30 and sold it at 40. I think I bought 10 shares, and I was so excited I made $100 in about 3 weeks. But I don't even know if Polaroid's in business anymore at this point. But the point is, you learn, like right now, we're going to have trends like automobiles being able to drive by themselves. We're going to have things like the human genome and mapping. We've got that mapped, and treating things with stocks like CRISPR and EDIT. Those are in the human genome area. So the point is, when you started investing, did you find that you almost like had blinders taken from your eyes, and that you kind of started to understand more kind of how the world worked because you were following then how real world events impacted your stock investments?
I completely agree with that. I've always been like kind of into politics and stuff like that, learning about what's going on. But this really opened up my eyes to look at everything that's going on in the world. We were talking this morning about the fact when Trump was going against like China and stuff, those Chinese stocks and stuff, it's probably not the best thing to get into right now because of what Trump was doing. It definitely opened my eyes and got me more involved with everything that was going on in the world.
And as we won't hold you too much longer here, we're almost 30 minutes, but what would you say, and I think you told me off camera that you have, I started to say, what would you say to other people looking to get started in the market? And I think you said that you did talk to some of your friends about getting started. So for those who are watching and go, I've been wanting to get started, I don't know how, and I'm afraid, what advice would you share with them?
What I would say is just do it. Pull the trigger and put a little bit of money in there. I've gotten at least four or five different friends, opening up a Robinhood account, just starting small. Start small, grow on it. It's an awesome experience. I listen to talk radio and stuff all the time, and they always have the commercials about diversifying your income. This is one of the ways to diversify your income, to make sure that you're not just getting your income from your 9-to-5 job. Like your 9-to-5 job can, support you. It's always going to support you, but taking what you don't necessarily need and putting that money into work is going to be, you're going to be thanking yourself 30 years later.
Yeah.
That's what I would say.
That's all well said. And the thing I said is, folks, sometimes I think we talk ourselves out of getting started in something because we're not going to be perfect in it. The way to get better at something is just to start doing it. And, are you going to make some mistakes along the way? Yeah, you're going to make some mistakes along the way. This channel is going to try to help you from making mistakes, because it's not that I'm the smartest guy in the room. I just say I'm so dumb I've made every mistake already. I'm like the carpenter who smashed his thumb 4 times, and then you kind of learn not to do that again. So, but, and it's exciting, it's worthwhile. And even if you don't, forget about being wealthy. I'm not saying that you're going to have your own jet like Donald Trump did. But if we say, and we hear this, I can't independently verify it, but something like 50% of American families don't have $1,000 set aside. That's just ridiculous. We're so wealthy in the United States, we have garage sales to get rid of all the stuff we have in our house so we can go out and make room for more stuff we want to buy. You can invest and you can become more financially stable by doing that than if you don't do it. And here and there, you're going to get a stock that's going to really grow for you. And as David and I were just sharing here, if we go back and look at, he bought the TQQ, look at that's the gold line. Is it going to go up without falling? No. You can see, like right here in the middle, it took a plunge. It took a plunge right in the beginning of the chart. This is back January and went down. But if you don't panic, look what happens. And over time, it goes up and up and up. And over 5 years, we're up $1,300. Where else are you going to get a return like that? And so when you say, well, I'm only saving $100, so I can only put $100 into the market. If it goes up 1,300%, I believe my math is right, that $100 would become worth $1,300. So over 5 years. So by putting that $100 in today, it's going to be worth a lot more down the road. And that's, I think, the lesson that we should all learn. It's a little bit like I often say, having a harvest with corn. If you plant your seeds in April, and that's what David's doing, he's a young man, he's planting his seeds in April, he's going to have a better harvest than if he plants his seeds in August, and you don't get started investing until you're 55 or 60 years old. It's not too late then if you haven't done it, but it's better to do it earlier. David, something I can't tell, but you can share with us, what is the attitude, if I might ask you, and I know you don't speak for everyone, but to the extent that you have a feel for people your age, what would you say is their attitude about investing? Are they indifferent to it? Are they interested in doing it? Just how would you describe it?
I'd have to look at a couple of different groups of my friends. There's a couple of groups that are scared of it, that think that it's like too volatile of a thing to do. But there's other groups of my friends that are like really excited about it. I've noticed in the past like 3-4 months that a lot more kids that are my age and stuff are getting into it, which is awesome. Robinhood's made that a little bit more easily accessible for them. I don't. I ended up, after talking to you, Robinhood's kind of like the training wheels, and then you move up to like an actual brokerage account of like Schwab, which is why I prefer. But
And you're with Schwab now?
yeah, but I would say that there's a lot of excited people about it, which is awesome.
Robinhood, and I've looked at that. I don't have an account there. I've been with Schwab for about 25 years, and I don't have any connection with Schwab. I don't get paid by Schwab. That would be nice if you're listening, but no. But as I said to Dave and some others, Robinhood has a nice graphical interface, but it's, to me, a little bit like investing with training wheels on, and I think if you go to a place like Schwab, you're going to be able to grow with that over the years, as I did. I mean, I was in my 30s when I started with Schwab. Schwab is also, I don't know if they're first. They might have been the first online broker. I think they were a revolutionary. Charles Schwab, the man, is still alive, and he was one of the real revolutionaries back in the 1970s when he started online investing, and now it's obviously exploded. And that's all for the good. I mean, what I want is this. I want every American to get involved in the market and be financially more secure and not just be living paycheck to paycheck. That's not the way to do it. And through this series of this channel and the videos we'll do, we want to be teaching everyone, just as I talked to David. But I can't talk to everyone for 2 hours at a time like David and I first did. David, before we close out, do you have any final words? You want any advice to people? I'll let you.
Well, just thank you for giving me the opportunity to speak out, and I hope I hope that I can kind of encourage more people to get involved. Like you said, I want more people involved too. It's exciting, and I don't want anyone to be, all the eggs in one basket, because if that basket falls, they're not going to be able to survive. So I I think what you're doing here is awesome, and I'm gonna tell all my friends to take a look at your videos, subscribe, learn, and yeah, I want to get people more involved,
Let me
just like you.
ask you one more question. You had said a couple books. I had mentioned a couple books to you. What books did you pick up any? Have you read, and if so, what kind of were they helpful?
One of the books that I would recommend, Rich Dad Poor Dad. I think you would probably know the author better than me.
Robert
And
Kiyosaki.
yeah, and another one that was pretty interesting that got me like a little bit more involved in like the charting and stuff and learning like reading the charts was the candlestick. I can't remember what the name of that book is, but I'm sure you could probably provide a link below if it comes to your mind. It was I think it's candlesticks.
You don't have to know everything before you get started. You can learn along the way. I often say 90% of learning is emotional. It's a little bit like the first time you went driving, how nervous you were, but now after a while you do things automatically without thinking about it, where when you first started driving you were looking everywhere. If you think about going back when you were in high school and started dating, how terrifying that was. I swear my first gray hair came from my first date. I was just like, so I was shaking, like a leaf. But then you settle in and everything, it's, just like dating is scary, but also exciting. So investing can be like that. It's okay if you're afraid at first. And you know what? You don't have to commit. If you got $1,000, let's say for the sake of discussion, you put $1,000 in Schwab. You don't have to invest it all at one time. You can invest $100 on something you think is right, and put $100 into 10 different things. It's okay to buy one share of something or two shares of something.
Yeah.
I'm actually going to do a video on that because I had a friend who followed my advice and bought just a couple of shares here and a couple of shares there. And some of those have gone up like 100% that they bought. So even, like $300 or $400 in a couple of positions had made them over $1,000 in profit. And you wouldn't think that. You think you got to buy a whole bunch of stuff. You don't. And, if you went to college, you would expect to have to go to the bookstore and buy some books and pay tuition. Think of investing, even if you just get started with a few shares, as paying tuition to learn the rules of the game. And if you make a mistake and you got 3 shares or 2 shares or 8 shares, don't worry about it. Just kind of chalk that up to the learning exercise, especially if you're like David, you've got years ahead of yourself. So David, I'm proud of what you've done. So many times you talk to people and they don't take action. You took action. And, that's a compliment to you that you did and that you went out and did that. And the last thing I'll say, and I probably have talking too much, but folks, just think about this. 90% of the American public are pretty much financially illiterate. And so to win the money game, you don't have to know everything. You just have to know a little bit because the competition often doesn't know anything. It's not something I'm happy with. It's something I'm going to try to commit myself to this channel to change. We're going to make people more financially literate, help them get ahead. And maybe we revisit David at another time and he can tell us how much money he's racked up doing it the right way. And David, if we get together in person, drinks are on you.
Okay, all right.
Anyway, thanks so much for joining us. And ladies and gentlemen, thanks for
Thank you.
watching. Good luck, good investing, David, and we appreciate you joining us today. Take care.